Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 19 weeks ago here, and at every opportunity since, I have said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either. End of quote. Now, I know I sound so utterly boring, but this point is important. I feel I must keep repeating it, such that in all things this year and going forward, all things should be seen in the shadow of this pattern. Okay, since the low in mid-August, we have seen the creation of four patterns. Firstly, a mid-August to mid-October bull channel. Secondly, a late July to late September reverse head and shoulders pattern for bright red neckline above the market, currently at 1024. Then the capping and slapping of the market lower by the overhead mauve medium moving average, currently at 990. And to a certain extent, though less so, by the green short medium moving average, currently at 1002. Leading to the third pattern, the early July to early October bearish shift pitchfork, highlighted in dark blue on my daily chart. This pattern is still wonderfully operational, still looking good, with the market in between the overhead upper time, it's currently at 1009, and the middle time below, currently at 913.13. The final and most recent pattern is the small November base head and shoulders pattern. In my last comment, this had not been triggered, but since then it has been, and has already achieved the primary and secondary targets on the downside. The break happened right after my last commentary last Friday. Prices have dropped down since the break below the 990 congestion, down through a fairly free zone despite the lows seen in October and November, down towards the next support, which is the September 2020 low at 942, and indeed the more recent low, this older one created, which is seen in August this year at 940. Looking below, we have a very interesting uptrend, a 21st century uptrend one, dating from 2001 to date, and it's currently at 912. This will intersect with the declining dark blue middle time this week. I can only repeat the words I said 7 weeks ago, and I quote, "Just watch this dark blue bearish shift pitchfork for the immediate bearish angle of attack." Chicago soybean meal. The main recent pattern driver here in this market had been, I suppose still is, the dark blue November 23 to early May 24 bearish shift pitchfork that you can clearly see on my daily chart. The market is right now just running underneath, as it has done since mid-October, just underneath the overhead upper time, currently at 295.35. This pattern had been previously breached on the upside over the turn from September into October, and arguably broken back then, prices having consecutive closes over the dark blue upper time. However, please note this break higher was not a spontaneous move, but rather the result of the construction of bullish incentives, notably the mid-August to early October bull channel that petered out, and we saw a subsequent break lower at the start of October. The actual cap on the market at the time had been the combination of the upper bull channel line and a declining long moving average, currently at 328.5, which saw just a single close over it before swiftly turning lower at the start of October. The break below the bull channel saw both the primary and secondary targets below for the bull channel achieved. So I raised the following point 10 weeks ago when speaking about both the primary and secondary targets and much more. That, and I quote, "If this should come about, then it raises the point that the dark blue bearish shift pitchfork could have repaired the break higher." And now I need to remind you once again of my words of 67 weeks ago. So that is actually now 78 weeks ago, nearly a year and a half, when I said, and I quote, "And ever since when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023 and I've been living in the shadow of this pattern ever since." End of quote. If there is only one thing you take away from my musings, let it have been those words. Now, 7 weeks ago I highlighted a new pattern, one that's developed since that high seen in early October, and is the bright red mid-May to early October bearish Andrews pitchfork. The market's been running along the top of the middle time, which is currently at 274.60 for most of the time, recently departing, really just going sideways, to hug the middle of the congestion dating from April to August 2020 that stretches between 282 to 300, but specifically centered around 290.70. I do not think this newer bright red pitchfork will yet replace the dark blue pitchfork, but rather, as I've said now for many weeks, I suspect it will complement it, and they will be working together, with the bright red pitchfork having a slightly more acute bearish angle. Now, to the most recent action. Last week we had a weekly key reversal down, which has not seen a follow through lower on my continuous daily chart due to changeover. However, we are on the verge of making a relatively rare possible compound key reversal pattern this week, possibly even a compound weekly key reversal down. Prices need either today or tomorrow to drop down to 285.5 or lower, and we have been lower since I started writing this, or even reading this. So we're down below 285.5, so we are set up for such a pattern. Determination of whether it is an up or down pattern would then be whether prices close on Friday night over 287.40 or under 286.20. If they close over, then we have an immediate countering weekly key reversal up. If they close below, then we have a compound weekly key reversal down, the rarer of the two patterns. Anything in between will have a lesser outside weak pattern. Right now we are moving towards looking a compound key reversal down right now. Chicago soybean oil. The main recent action here had been the construction of an early July to late August bear channel, leading into a very late August, early November bull channel, which we saw a break higher from in the first full week of November, followed by an almighty dive lower for most of the rest of the month. The igniter for the move lower was the interesting 38.2% Fibonacci March 2020 to April 2022 move at 48.95, which I pointed out 7 weeks ago, and which had, and I quote, capped prices in July, the start of April, the end of March, mid-February, and throughout January, as well as this past week. End of quote. Now, we did see a small bearish halfway hesitation on the way down between about 44.5, where the long moving average had been back then, it's currently at 44.13, and the 46.5 area, where we saw some highs at the end of October and late July. I suppose you could even call the action over most of November a very narrow head and shoulders top, but that might be pushing the envelope a little far. I understand that. Nevertheless, we saw this bearish halfway hesitation potential reached on the downside. Now, since reaching there, we have been caught between the late November to early December within a previously mentioned congestion zone, within a specific part of it, in between the supports at 40.53 and 41.15, and the overhead congestion from May 2024 low at 42.52, the April 24 low at 42.67. Above all, declining mauve medium moving average, currently at 42.44. Any attempts higher had been, at best, half-hearted, and at worst, indecisive, especially last Monday, where we had a combined key reversal down and bearish engulfing pattern. I also suspect any approach to the next overhead resistance, which is the green short medium moving average, currently at 43.42, withered the support and prices turned lower as a result. This past Monday, the market closed, not for the first time, right on the dark blue lower time, currently at 42.40, of a new prospective dark blue bullish Andrews pitchfork that I drew 4 weeks ago for the mid-August to late November move. However, this time it was different, as this past Tuesday's actions testify of a big move down through the November low at 40.64, plus down through the support at 41.15 and 40.53, and a further move lower, enough that the mid-November to date action, indeed the whole of November to date, could be seen as a very large bearish halfway hesitation, with the first potential down towards target X in the 38.50 zone, and a second potential down as far as the 35.90 zone. The first potential is doable, but we will have to see if the second potential is possible, as it is down to lows not seen since November 2020. It also will raise a question as to what the whole July to date action might be as well. By the way, I will retire the dark blue bullish Andrews pitchfork by the next commentary.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Tofpik and ADM Investor Service International Limited. And here comes the final important bit.